Welcome, ladies and gentlemen, and good morning from Commodity TV. And yeah, it's a new edition of our online interview series, and we want to talk directly to the funny little island in the North Sea, Caledonia Mining. And Mark Learmonth, the CEO, is here with us. Good morning, Mike. How are you?
Good morning. I'm actually in London today. I'm not in the funny little island in the North Sea.
That's the one I meant, the big one.
Unless you meant the UK. Unless you meant the UK.
Yeah, I'll call it AK. Yeah, Caledonia Mining. I'm a happy shareholder of your company. By the way, thanks for the dividend payment, which I just received 2 weeks ago. Always highly appreciated. That's really lovely. And I mean, you guys are delivering and delivering and delivering. You just published your Q3 numbers. And again, despite, I would say, inflationary environment, really not easy to handle everything, you had fantastic numbers.
Yes, they were good. Gross profit was $15 million for the quarter, $50 million for the 9 months. Net profit was about $8 million for the quarter, $25 million for the 9 months, and that's really driven by higher production. As we said, this year we're targeting 73 to 80,000 ounces. That is a significant increase from last year, and as you know, we've exceeded 20,000 ounces a quarter for the last 2 quarters. So we're well, as far as I'm concerned, we're there in terms of our target of 80,000 ounces a year. So that's good. As you mentioned, we are seeing some inflationary pressure. But I think for us it's less bad than it is for other gold producers. We will see natural economies coming from the operation of the central shaft, which we're not seeing at the moment. So that will help to put a lid on inflation. Then also we'll be starting up. We started up the solar plant this morning. With that $14 million solar plant was started up this morning, which is now delivering power to the mine. It's displacing more expensive grid power, displacing more very expensive diesel power. So we'd expect that will again reduce that will take about $37 an ounce off our cost. Wow. So there's things we can do. There's things we can do, and we are doing to try and blunt the effect of inflation. And because we pay our workers in US dollars, and then they then convert those US dollars into Zimbabwe dollars, we're not really seeing the sort of significant sort of inflation on labor that you'd see in, say, Europe or perhaps North America. So yeah, inflation is there, but it's not as bad for us as I suspect it is for other people.
Fantastic. Yeah, but first of all, congratulations to the solar plant, because I mean, cost is one effect, but the ESG effect is also significant, because when you are taking off diesel for the power, your CO2 footprint will shrink dramatically, right?
Yes, it will. We're beginning to measure that, but it's fair to say that for the last couple of months, the quality of the incoming grid supply has been really very poor indeed. So we've been running the diesels hard, and I think for the last couple of months we've been spending nearly $1 million a month on electricity, primarily diesel. By December, that will fall to about $300,000 a month.
Wow, that's a lot of money. Fantastic. That's really nice. With that solar power, is that just, let's say, the first step with that plant? Will you enlarge that maybe? Does it make sense?
It is the first step. First thing we'll do is we will seek to refinance that. That whole solar project was funded through equity, $14 million, and having a sort of an infrastructure project funded through equity is a bit daft. So we'll refinance that. We're already considering a second phase, but I have to say that things are happening quite quickly in the Zimbabwe electricity space, and it may be that we can import power directly from a hydro producer in either Zambia or Mozambique, which would improve the reliability, but also would completely address our green issue. So frankly, if we can import reliable power from hydro in Zambia, there would be no need for a second phase of solar. But yes, we are considering it actively. Yes, yeah.
Fantastic, super. And if we look, how can I say that? If we look now, what you guys have done so far, you said 73,000 to 80,000 ounces for this year. So from next year onwards, you want to do the 80,000 ounces consistently?
Yeah, that's the idea, is 80,000 ounces consistent. Yeah, subject to normal mining stuff, So I'd expect it to be in a range of, I don't know, say 78 to 82.
Around
80,000 ounces a year.
Yeah, let's call it a 5% variance. That's normal.
Just to give you something.
Super. Okay, perfect. You guys are also working, or have worked already this year heavily on the future of the company. I mean, you brought out a updated mineral resource and technical report for Maligreen, for example. I think that is a project which could be easily be enlarged and probably might be a future production, right?
Yeah, look, I mean, our Maligreen, we bought Maligreen in November last year. It had 1 million ounces of inferred resource. What we've done over the course of this year is we've reevaluated the existing core. So we've not had to put drills on the ground, and we've upgraded a portion of that inferred resource to M&I. But to be honest, Joachim, and there is substantial exploration potential at Maligreen. So don't for a minute think that 1 million ounces is the end of the story there. It could easily double. But frankly, it's been overtaken by Bilboes and most recently by Motapa, which are Bilboes is much more advanced. It's much bigger as well. It's got 2.5 million ounces of resources at a good grade, of about 2.3 grams a ton. It's got a feasibility study. So we're now making progress towards completing that transaction. But because it's just much further advanced, that would be the first cab off the rank, so to speak. And then to sort of compound the pleasure of Bilboes, we announced that we've now acquired Motapa, which is immediately adjacent to the Bilboes property. Now there's no formal resource on the Motapa property, but there is historic information which we've seen, and we're very confident that Motapa could be bigger than Bilboes and with a better grade. So put the two together, put Motapa and Bilboes together, and we have potentially a very large and very exciting new gold business in Zimbabwe. So that is really going to be our focus now over the course of the next sort of few years. Very exciting.
So I read also in your news release that you will work then also on a feasibility study for Bilboes. But I mean, the deal has yet closed or not?
No, it's not closed. The deal is subject to various conditions. It's fair to say that so we signed the sale and purchase agreement in late July. We started our engagement with the government immediately. I went down to Harare, I think the day after we'd signed. I met with the Ministry of Mines and the Ministry of Finance and told them what we were looking for. And then it all went very quiet from the Zimbabwe side for a couple of months. Partly, I think, because some of the key people had some health issues. But the president of Zimbabwe is actually visiting Blanket Mine on Thursday to formally open the central shaft, and we've made it very clear. We've made it very clear to the relevant authorities in Zimbabwe that will be an opportunity for us to update the president on the progress towards completing the Bilboes deal. And it's fair to say, over the course of the last 3 or 4 weeks, the pace of activity has improved enormously. So we are now beginning to see quite a lot of activity from the Zimbabwean side, and I'm confident this thing will close. Ideally for us, it would close early January, simply because we have a resource reporting, a US resource reporting requirement for any properties that we own. And clearly, we're comfortable complying with that resource requirement from our current properties. It might be difficult for us to make the Bilboes information comply with the US requirement. So, frankly, a closing early in January would probably suit us best.
Fantastic. Let's speculate a little bit. 80,000 ounces with Blanket, Bilboes, 150,000 ounces in the future.
Yeah, Bilboes is looking. The existing feasibility study is for, I think, about an average about 170,000 ounces, and we'd still intend to do that. Just we may not do it in a single leap. We may do it in a phased approach, but certainly 170,000 ounces is what's on the feasibility study. Motapa could either or both could either increase that 170 to a bigger number, or extend the mine life quite significantly. So I'd be comfortable penciling in at least 250,000 ounces at least for Bilboes plus Motapa, maybe bigger, and then Marley Green, I would expect. You don't really want to build a mine that's operating at less than sort of 50, 60,000 ounces a year. It doesn't really have sort of critical mass. So perhaps Motapa could be another sort of 50, 60 on top of that. So you can quite easily see scope for a very substantial gold producer.
Yeah, I would say between 300,000 and 400,000 ounces then within the next 4 or 5 years.
I'd have thought 5. We're going to be quite cautious about how we fund this. We would prefer to go somewhat slower and reinvest the cash that we're generating in exactly the same way that we approach the Central Shaft project at Blanket. If you remember, we funded that all through internal cash flows, and that's good because it minimises dilution. But having said that, if you go too slowly, you don't get sort of that sort of
traction.
You don't get traction, and you don't get sort of that velocity that you really need. So it'll be a combination. It'll be a combination of internal cash flows, probably a modest equity raise, and some debt. Although, as I think we discussed in the past, we're pretty conservative about debt. We know that debt
can squeeze.
Debt for certainly for gold producers can become uncomfortable quite quickly.
Yeah, I mean, we have seen that with Great Panther, right?
Yeah.
For example. Yeah, absolutely. No, I like the approach, honestly. And I mean, if you do it like with the Central Shaft, chapeau, because you still pay dividends and you paid for the shaft and you had enough money and you had no debt on the balance sheet. That's exactly.
I think one of the things we've mentioned before, but we've not discussed on this call is don't underestimate the potential for further growth at Blanket in due course. We believe Blanket, we've got I think 6 kilometers of strike across two ore zones. So that's 6 times 2, that's 12. Currently, we're only exploiting 3 kilometers of that. So there is very substantial exploration potential at Blanket, both deeper in the shallower areas of the existing mine operation, and then towards the north and south of the existing ore bodies, and then along the parallel formation as well. So we think there's a lot of potential at Blanket as well.
Fantastic. Now, that's great. That's exactly what we want. That's why you built the Central Shaft so deep, right?
Yeah.
Because that makes really sense. Super. Mike, thanks for the update. That was fantastic. Like it. And congratulations again to the solar plant, because I think that is a big step in risk diversification, but also a big step for ESG and a good day for the environment today. And so keep it going. I would say keep us updated. And thanks again for the dividend. I do not expect that to rise for the next years because you guys want to invest a lot of money, which I think is also lifting a lot of value, but well done, and thank you very much.
Good, thank you, Jochen.
Thank you. Yeah, ladies and gentlemen, that was Mark Learmonth, the CEO of Caledonia Mining. And you heard it, the company is full on track, fantastic quarter. And what is really important, the solar plant is up and running, now taking care of approximately 25 to 27% of the energy power this Blanket mine needs. And the company still has no debt, which we really like, and is on the growth path with Marley Green, Bilbao, and Motapa. And you heard it. For next year, hopefully everything goes the smooth way how we wanted it. And this company is definitely on the path to become within the next 5 years a 300 to 400,000 ounce producer. And then be sure they will do a nice dividend to us. So check out the company. Thanks for watching us, and bye-bye from Switzerland.